I'm Abby Maloney. I'm joined today by Robert Fragasso, the chairman and CEO of Fragasso Financial Advisors. Bob, thank you so much for being here today.
Thank you for inviting me, Abby.
Let's dive in. Cryptocurrencies have received a tremendous amount of coverage with commercials and even stadium names encouraging the buying of these new currencies. As someone who has been in the investment management and financial planning industry for more than 5 decades, what are your thoughts on cryptocurrency as a long term investment?
I don't believe it should be a long-term investment for anyone right now. I believe it will be a legitimate currency in the future, but right now it is unregulated, and there are too many nefarious people operating with that as a currency. There's no redress for
Yes.
things that have gone wrong. I feel a little bit like the bar scene in the first Star Wars with all those crazy characters, and
Sure.
I'm in there trying to deal with a cryptocurrency. We had a hacker call us, and they were and it had to do with crypto with Bitcoin. So it's not an arena in which we would entrust the serious money of our clients.
Bob, what do you think needs to happen to make it a more reliable investment vehicle?
Well, two issues. One would be the currency itself to be traded, and secondly, for investment, it needs to have what all legitimate investment vehicles should have, and most do, and that is regulation. But it's more complicated with the cryptos because it's international. So it
Right.
isn't just the United States regulating it. There has to be a common agreement among the countries where it may be traded. And that's somewhere in the future. It'll happen, but it's not going to happen for a while. And it is a bit of the bar scene or the Wild West in the meantime.
In that same vein, what do you believe is the viability of other alternative investment vehicles like NFTs?
They fall into the same category. They're not regulated. When they're regulated, when they're traded in a uniform way, people can count on it. If you have the imagery of someone taking over an abandoned cotton mill in New England and putting in racks and racks and racks of wired together PCs, and they're mining Bitcoins, and you're going to buy those, that's uncomfortable. It has to become legitimate.
There is an unprecedented amount of capital flowing in the economy, resulting in a greater saturation of markets and assets. What does that mean to us?
The economies respond to the amount of capital, and we're seeing that. That's why our markets are resilient, because of the amount of capital that's been pumped in. That's not necessarily bad. For example, it can spur innovation if it's funding the right kind of innovation. I'll give you a historical example.
Sure.
Coming out of World War II, there were tremendous innovations, but we were starved for capital because it had been used, and we were paying back the debt of the World War. Now the surplus of capital is available. The risk is that it begins to fuel speculative endeavors, as what happened in the 1980s with tax shelter investments.
Right.
So as long as that capital is funding legitimate innovation, and mostly it is, then it's positive for the economy.
At the same time, the past few years have shown great global uncertainty with events such as the pandemic and the Ukrainian Russian war. Aside from cryptocurrencies, what creative avenues and asset classes are investors exploring to maintain long term stable returns?
Certainly real estate is one, but real estate is not a homogeneous term. There are many, many facets of real estate investing. Right now, it seems as though housing and multifamily are capturing the office marketplace. The office marketplace is challenged given the work at home or hybrid work at home model, as I am right now, working from home today. So I'd be leery of the office marketplace, but there is going to be quite a market in rehabbing those B level and C level office spaces into more productive use. Yet many of those asset categories are illiquid. They're regulated because it's a regulated economy and they're legitimate, but they're illiquid. And so an investor has to understand that that money may be tied up for a decade or more. We're looking at some, for our high net worth and ultra high net worth, we're looking at some alternative investments. And I can't describe them in detail because I can't purport to tout them. But there are debt instruments that are creative, that are legitimate, and there's reasonable risk in many of those. I think the overall answer to your question, Abby, is the more we are asset allocated among co-varying asset categories, the more plannable the trajectory of return will be. So yes, there are a lot of opportunities. They have to be researched. The due diligence has to come up right, and then they might be used in certain portfolios, not all. One size doesn't fit all.
Given the fallout from the Ukrainian-Russian war, in particular the removal of Russian banks from the SWIFT system, how might events like this now and in the future shape market expectations?
Oh, I think they do, but again, in the short term. And we also have to look past the immediate. It's cataclysmic for those poor people in Ukraine and also tangentially for surrounding countries that may be at risk. And that is a fact of life. It's always been a fact of life. Could you imagine if you were asking me this question in the middle of World War II? Well, at the beginning of World War II, the market went up. It didn't go down. At the end of World War II, the market didn't go up. It went down. So the markets look past the immediate event, and we as intelligent investors have to look past. So let me give you an example. High oil prices that were spawned by that conflict with Russia. Well, what does that mean? Is that going to spur alternative investments? What are those investments? What are the most viable of the alternatives? And as intelligent investors, we have to look past current events. But going into those events, we have to populate our asset allocated portfolio in a way that that hedges some of the risk. So that's why they call it portfolio management.
Generations have sparked a greater awareness of ESG. What are some creative ways you have seen investors create socially responsible portfolios without sacrificing returns?
It's interesting that you use those two terms together in the question, because years ago, socially responsible investing was trendy. In fact, I taught a course at the University of Pittsburgh in socially responsible investing. It was approached the wrong way. It was approached for the end result rather than the underlying investment merits. So for example, you might want to avoid animal testing in the products you buy. Fine. Well, you would have ended up with a portfolio full of cosmetic companies that didn't test on animals, or natural soap companies. That would have been a very unbalanced portfolio. First, one must look for the right securities to populate, if you're buying individual securities, to populate your portfolio. If you're using mutual funds, ETFs, and so on, then the preponderance of the securities in those vehicles should be viable investments. Then you screen a second time for now social responsibility, governance, environmental, and social. That does not offer a diminishment of return. I would argue that it enhances the return because socially, environmentally, and governance responsible companies are going to do better longer term. They're not going to have to come back and backfill for their irresponsible mistakes later. So yes, we're finding that not only are our institutional clients demanding ESG, but many of our individual clients are too, if it's understood in the way that I just described. First, find the right investments, asset allocated properly, then screen for ESG criteria.
Bob, today you spoke a lot about creativity in the investment world, and that's what we're looking at in Season 5 of Invest Insights, creativity. So how would you define creativity? And what are some unique ways that you are fostering creative thinking across your organization?
It's really a great question because I think we all have to do that in all fields and certainly in ours. Creativity means looking beyond, as we were discussing just a little bit ago, looking beyond the obvious. What are those alternatives? You know, we're all familiar with the folklore of the wonderful tech companies, giant tech companies today that started in a garage. That came from creativity. That came from fearlessness. That came from a lot of other good qualities. Boldness has its own momentum, as John Kennedy said. So creativity is looking beyond the obvious. What are other better, faster, more efficient, less expensive ways to do what we're doing or things that we want to do? Creativity, that's how I define it. Creativity comes from inclusion and diversity. And by that, I don't mean strictly in a politically correct sense. I mean including everyone from diverse backgrounds to bring their point of view. And you have to include all of the people in the office. It's not simply the executive team dreams it up and then tells everybody else what they're doing. All of these ideas have to come from all reaches of the organization. And if you're structured properly, the organization will bubble up great ideas.
I like that a lot. I like the looking beyond the obvious and including everyone at the table. I think those are both important elements. Well, thank you again. That was Robert Fragasso, the chairman and CEO of Fragasso Financial Advisors. If you like this video, don't forget to like and subscribe to our channel to hear more CEOs and thought leaders give their advice and opinions on today's business climate. Until next time, I'm Abby Malone, and this is Invest Insights. Thank you for tuning in.